Good morning and welcome back to another episode of The Rational Investor. My name is Adam Kahn. Today is December 31st, New Year's Eve, Sunday. Hope you guys are excited. Sundays are becoming one of my favorite days. I get to talk about the portfolio that I did for YouTube. We'll go over it and see what you guys think. And if you have any comments, by all means, chime in. So stick around and I'll get to the companies I have and everything else again. So, for those of you who don't know me, my name is Adam Kahn, and I'm the Rational Investor. So, every Sunday for the past 5 weeks, this will be week 6, I've been going over the stocks that I bought and what I did for a portfolio that I opened specifically for YouTube so we could go over it. My hope with this portfolio is to show people how easy investing is, and so that people don't get overly scared about it or uncomfortable or anything else. Now, that being said, before I get into it, before I talk about it, before I forget anything else, if you haven't already, do me a favor and subscribe to the channel and hit that thumbs up button as well. It really helps YouTube's algorithm, so it helps other people be able to find the channel as well. And if you're enjoying the content, I really appreciate it. That goes a long way, and I want to say thank you for that. On top of that, I can't tell you how excited I am that how the channel's grown. I'm up to 2,500 subscribers, and for some of you, I know that's going to sound really silly because there are tons of people with 10, 20, 100, a million subscribers, and 2,500 in the world of YouTube is probably pretty small. But I'm really touched by that, and I want to say thank you to everybody because it's super cool to me. I mean, the first few months I was up to like 20, and most of them are people I know and friends and things like that. So it's so awesome to see how it's been growing and everything else. So again, thank you. And I'm looking forward to a wonderful 2024, not just in the markets, but I really am. I think there's a lot of nervousness out there. I think the economy is doing better than people think. I don't want to say that it's booming, but there's an old saying of, markets climb a wall of worry. I feel like that's where we are right now. People are really nervous. They're in CDs and treasuries and high yield savings accounts and things that a lot of people probably never even thought to move into, that they've taken their money out of the markets and gone into there. Well, I find when people push all their money into something, generally that's not the best investment. Now, I'll make my little disclaimer as well, which is this is not financial advice. You guys really need to do your own research. You shouldn't listen to me other than entertainment purposes. And if you find the information interesting, I'm just sharing the stuff that's worked for me over the years. That doesn't necessarily mean it works for you. You should really seek the advice of a financial advisor, or if you know what you're doing, make those decisions for yourself and not based on what I said. Now, that being said, I find generally that when people all push into one area, it's generally not the best place to be. And I think a lot of people pushed into treasuries, CDs, and high yield savings, like I said, which is essentially cash on the sideline waiting for the correction that they think is coming. Why I don't think that correction's coming. By the time you walk into a high rise building and the doorman is talking about, man, did you see real estate just going higher? Or, oh my God, did you see this new blah, blah, blah stock? When everybody out and about in public is talking about it and picturing it going higher and higher, is generally when it's gone too far. And that's when you want to be considering those safe investments. Anyway, I'll get into the portfolio. I figure since it's New Year's, it's a good opportunity to reevaluate some of it. I really meant these as buy and hold, but good excuse to reevaluate and see if I wanted to move some things into some different things. So stick around a bit. I'm going to hit pause, pull up the sheet. I'll put a picture of it as well. Now, in about, I don't know, 20, 30, 40 seconds, I'll rattle off all the stocks in the account just so we know which ones I'm going through, and I'll tell you the ticker symbols as well. A little background of my thought process and everything on how I invest. I'm a real believer in Peter Lynch, where his concept is buy great companies and own them. I really believe in that. Now, since I watch the markets all the time, and since I've been watching for the past, oh my God, 30, 40 years, I try to time it, and I don't try to time it like a trader as much as when I was on the floor, but I try to time it in the sense of when there's some bad news, if the stock is getting beat up, that I can buy a really good company for really inexpensive. There's a lot of companies on that list, but I have a nice big list in my head of great companies out there, and if they happen to be going through tough times, I like to put them on and then stick it out for 4 or 5 years. So I'll go through the list. I'll let you know which ones I'm reevaluating and why, and I'll probably decide tomorrow if I want to make any changes. So we have Archer Daniels Midland, which the ticker symbol is ADM. I have Amazon, which the ticker symbol is AMZN. We have Best Buy, which the ticker symbol is BBY. We have Bristol Myers Squibb, which the ticker symbol is BMY. Caterpillar, which the ticker is CAT. ENPHase, which the ticker symbol is ENPH. Foot Locker, which the ticker symbol is FL. Googl, GOOGL. There's two options on Googl. They're really pretty similar. One is just GOOG, um, but they both move in sync with each other for different reasons. One that I just called JEPQ, JEPQ is a ticker symbol. It's a JP Morgan covered call strategy that uses the NASDAQ. Um, I have Facebook or Meta, META. We have 3M, which is ticker is MMM. I have Altria Group. The ticker symbol is MO. Nextera Energy Partners, NEP. Pfizer, PFE. Virtus Infracap Preferred Stock Fund, which is essentially an ETF or a fund that manages a big portfolio of preferred stock. Ticker symbol is PFFA. Qualcomm, which is QCOM. Restaurant Group, which includes Burger King and things like that, which ticker symbol is QSR. Starbucks, SBUX. ExxonMobil, XOM, and Zillow Group, which is just the letter Z. This week was a little bit more normal for returns, and you tend to have ups and downs. Like I said, this portfolio, the timing was unbelievably lucky. The market had a huge run at the end of the year. I don't expect these types of returns typically in the time frame that I've had the account. I would expect it over a full year, not a month and change. So week over week, this week we were up $2.10. The total account value at this point is $11,161.03. If you don't remember, I put $10,000 in it to begin with. Now, those of you that don't have $10,000, I want you to understand I totally recognize that that's a lot of money, and I really want people to get comfortable with as little as you have, you can start investing. You can buy one share of a $30 stock to get started. You don't have to put up a lot of money. It's just a matter of savings and continuing to put in over time. The reality is the more you can put in, so you need an active job, and the longer you can leave it in, the better you tend to do. So our total profit so far is $1,149.47. And we even had a small dividend this week from PFFA for $4.13. So these are just in alphabetical order. I'd say they're in no order, but the reality is that's an order. So Archer Daniels Midland, we have 6 shares. The total value right now is $433.32. Our total profit, which is actually a loss, is we've lost $9.84 over the 6 weeks. Week over week, Archer Daniels was up $4.32. Archer Daniels Midland is a food processing and packaging company. I still like that space. I'm not looking to make any change in them. I'm pretty sure they have a dividend as well. But I think it's a company that's really hard to compete with. It's one of the ones that I actually don't have in other portfolios, but it really is one I would take and put in the safe deposit box for any of you who watched yesterday's video or the day before, where it went into how I have 3 different types of accounts where I keep the stuff that I really just put in the safe deposit box so I don't touch it. I don't trade it. I'm not tempted to. I have a specific account dedicated towards dividends that I'll push the money into my checking account to help with paying bills or whatever else. And then I have a separate small account that I use for trading because my background is I used to trade on the floor of the exchange in Chicago. It's hard for me to get that personality out of me. So I keep a small amount in there just so that I have the ability to continue to do that because I enjoy trading. And in that account, I'll sell covered calls, I'll sell puts to get into positions, I'll do all sorts of different things that sometimes I'll talk about in some videos. Oh, geez, microphone turned off. For some weird reason, I had a feeling, but forgive me if there's like a jump that doesn't make sense. I'll start into the the portfolio. Hopefully, I'm in the right spot and didn't mess it up too bad. I know I was just talking about 3 different accounts that I have. Um, so let's go from there. I'll double check every now and then because I really went pretty far into it. So first on the list, alphabetically ordered, I would say it's in no order, but the reality is that's an order too. So Archer Daniels Midland, ticker symbol is ADM. We have 6 shares of Archer Daniels Midland. The total value is $433.32. Our total profit is a loss, $9.84. And week over week, we were up $4.32. Now, Archer Daniels Midland is a big company that deals with food processing and packaging and things like that. I think they're a great company. I don't own them in any other accounts, but they're one of the ones I would put in the safe deposit box and own forever. So it's not one that I'm going to reevaluate. I'm not looking to change into something else. I like Archer Daniels Midland, and I plan to own them a long time. Then we have Amazon. We have 4 shares of Amazon. The total account value right now is $607.76. Our total profit over the 6 weeks has been $27.44. And week over week, Amazon was down $5.32. Amazon's one of my favorites. I think they're a phenomenal company over the next 10 years. I think they're just going to continue to grow and grow. I think Amazon's actually a great name for them. Um, it's one of my largest positions in the safe deposit box. I really don't plan to do anything with it except maybe accumulate more of it over time. So not one I want to reevaluate. Number 3 in alphabetical order, I don't know if that's number or letter 3, is Best Buy BBY. We have 8 shares of Best Buy. Total account value is $626.24. Total profit so far is $82.24, and week over week it was up $14.88. Best Buy is one of the companies I want to reevaluate. Every time I talk about it on the channel, one of my concerns is I don't know that I really think it's one of the best companies there is. I think it's a very good company. I have no issue with Best Buy. Again, you guys should do your own research on all of that. But I just thought retail space was oversold in general, and I thought them included. Their dividend had pushed up to like high fives or something like that, and some bad news had come out. So I thought it was a really good price, and it is a good company. I just don't know that it's one I want to own for the next 5 or 10 years. It just looked like a good opportunity to me. So I'm trying to decide, do I just leave it because originally I wanted to show you could set it and forget it? But to be fair, since it's New Year's and I don't know that I love Best Buy all that much, it's one I'm going to consider throughout the year if I don't change it on the first, just to try to have it the way I want the whole portfolio set up. Next, I have Bristol Myers Squibb. We own 10 shares of Bristol Myers. Total value right now is $513.10. We're up $19.90, and week over week it was down $11.60. Bristol Myers is a good company in the industry that they're in, which is drugs and selling medicine to people. I have no issue with them. They have a decent dividend. It's not one that's going to double or triple in a year. It just doesn't move like that. But it's a nice, stable company that should pay its dividend and maybe be up a little bit as well. And I have no issue. I'm not looking to reevaluate. Next in alphabetical order, I think we're up to 5, is Caterpillar, ticker symbol CAT. We have 2 shares of Caterpillar. Total account value is $591.34. Total profit so far is $86.12. And week over week, it was up $10.62. Now, not only is Caterpillar not one that I want to reconsider, it's one I don't own in other portfolios, and I really wish I did. I think they are a great company. I think it's really hard to compete with them. Who's going to put up the billions of dollars to build bulldozers and tractors and all sorts of things to fix roads and everything else? So I think they have almost a monopoly in their space, and their PE ratio is only like 17 or 18. On top of that, they pay a really small dividend. It's $1.30 a share when they're making like $17 a share, and that's per quarter. So they have total room to raise the dividend if they want to. They have incredible cash flow. And I just see it as a company that's kind of put itself on an island of how do you compete with them? So I just see them in a position of being able to earn more and more slowly over time as long as they don't overcharge their clients. Enphase, ENPH, is who I have next on the list. We have 5 shares of Enphase. Total account value right now is $660.70. We're up a total profit of $193.80, down week over week $8.15. Now, Enphase is one I'm reconsidering. Not The problem with Enphase is I don't really know a lot about the company, which makes me uncomfortable about it because I want to own the things that I really know what they are. What I know about Enphase is I recently put solar in the house, and I've said this in other videos as well. And 3 of the 4 people that came out that were giving estimates on the solar kind of went on and on that Enphase makes the best inverters of any of the companies. Now, typically, when somebody makes the best of the best of something, that does just well. Unfortunately, since I'm not in that industry, which is why I sometimes say to you guys, if you're in a specific industry and you know something that makes the best thing, that's really good insight. Um, I don't know enough about Enphase to feel comfortable, and I don't know if my timing was just lucky. The reason I bought it is when I looked, the stock had fallen from $340 a share to like $80 a share, and I have all these guys telling me how they make the best inverters, and I thought, geez, that looks like it's on sale. But I don't know enough. Like their PE looks just fine, but I don't know if they're growing or if solar's just in an industry that's going to slow down as the economy is slowing. So I'm trying to decide what I want to do. That's unbelievable return in 6 weeks. So maybe I leave it, maybe I don't. Part of me just wants to leave it because maybe I get lucky on it. Next on the list is Foot Locker, ticker symbol FL. We have 22 shares of Foot Locker. Total value is $685.30. The total profit so far is $202.76. And week over week, it was up $4.84. Now, Foot Locker, even though we're up a lot, I feel a lot differently about. Foot Locker I bought because they had a new CEO that came in last year. It's almost year to date. I mean, it's just barely over a year. Her name is Mary Dillon, and she took Ulta Beauty, and when she worked there, she made them go up in value a ton. And then when she left, she wanted to work for Foot Locker, from what I understand. I don't know what her vision was, but generally, people who have success at one place and go somewhere else continue to have success because they're good at what they do. I think she has some sight, like direction that she sees for Foot Locker. And to be fair, the sneaker and shoe business has really changed over the years. Maybe she has a way that she sees to make it go 10x or something. So I'm not nearly as concerned, or it's not something I want to reevaluate. I'm hoping she hits a home run and I get lucky with it. Now, again, you guys need to do your own research on what you like. I love the idea behind Foot Locker, and it's paying a good dividend too. So my attitude is, even if it's wrong, if it just flounders here and I can make a 5% dividend, that's okay too. And if she does what I hope she does, I'm really hoping to hit it over out of the ballpark for over the next 5-10 years. Now, after Foot Locker, I have Googl. I picked the Googl Google, but there's also a Goog one. They move in the same direction. They're a little bit different in price, but it's not like one goes up and the others go down. It's pretty much the same company. One has voting rights, one doesn't. At least I think that's what the difference is. So the total value that I have right now in Googl is $558.76. Our total profit so far is $24.28, and we were down week over week $8.16. Similar to Amazon, Googl is one of my favorite stocks. It's one of my largest holdings that I have in the safe deposit box. I don't want to trade it. I don't want to sell calls against it. I don't want to lose the stock. I want to own the company. I think they're going to continue to grow, especially I love the YouTube sector. I mean, since I found YouTube, like I'm on there a lot. Honestly, I don't just create the content, but I watch other people who talk about the same stuff. I find that I watch other stuff too. It's nice that I can pick and choose exactly what I want to watch. On top of that, when I watch my son who's 13, he looks at Googl the way I used to watch TV. I don't even know that he pays attention to NBC. Like, I don't even know that he knows what they are. But this is where he gets his content. So I figure that's the younger generation. So there's no reason that Googl won't continue to grow. And I notice more ads, which I don't mean it the wrong way, but the reality is that's how they drive revenue. So in time, I'm guessing they'll have more consistent ads. You might have to watch them or whatever it is they do to make it continue to grow in profits. After Googl is a JP Morgan NASDAQ covered call strategy fund, JEPQ. We have 10 shares of what I call JEPQ. $499.30 is the total account value at this point. The total profit so far is $9.20. Week over week, we were down $2.90. Now, JEPQ is one that a lot of people know about. I do not love this fund. In fact, I sold it in my other accounts when I started reading about the covered call strategy funds in general. I don't want to be too harsh on it because it's not a bad fund and it pays a nice dividend for people, but it's not what I want because it's actually going to limit your upside potential for growth. And I think a lot of people get overly attracted to dividends. So they see the dividend that it pays and they want to own it, but don't realize if the market goes up, they're really limiting how much they can make, even though it's coming out as a dividend. It's just not, they're not funds I want to be in anymore. I'm holding it in this portfolio because there's no reason not to, and we'll see how it does in comparison to everything else. Um, Next on the list is Meta, Facebook, as I still think of it as. Ticker symbol is META. We have 2 shares of Meta. Its total value right now is $707.92. Our profit so far over the 6 weeks has been $38.42. And week over week, it was up $1.42. So forgive me if I ramble about Meta for a little bit. That's my biggest position in the safe deposit box. I want to own more of it, and it's probably too big a percentage of my portfolio already. I can't say enough about it because even it closed the year around $350 or 352. Even at 352, its price to earnings ratio is really reasonable, which is much more important for those of you who don't understand it than the dollar price of a stock. That means what their price in relation to how much money they make are. And their expected growth rate is still really good. So they plan to continue to grow over the next year or two. Their pricing is really fair. I just can't say enough about Meta. I think the stock is just going to continue to explode and surprise people. I think the fact that it had a move kind of similar to what I say about ENPH and scared everybody when Zuckerberg was talking about going into the metaverse because they were worried he would take all the profits and start spending it. Well, it dropped the stock down to like 80 some odd dollars a share. And all I can say is I wish I had picked up more, and I have too much as it is. I just think Meta's the best of the best. I think people don't really like Zuckerberg all that much, which I think makes the stock always be a little bit decent value. That's my favorite of all. So I guess we'll see how it does. I'm not looking to reevaluate it. If anything, like I said, I'd want to buy more Meta, but this isn't a count that we add into. So after Meta, I have 3M, ticker symbol MMM. We have 5 shares of 3M, total account value $546.60. Our total profit so far is $71.60, and the week over week change is $15.20. 3M is also another company that to throw in the safe deposit box, so I'm not really reevaluating it. They did have a lawsuit that they had with I forget which country it was, but where they were damaging the water system, and they, essentially the governments were like, hey, no more. Now I'm guessing they move past it and the stock goes higher, and if they do, really it's just something I want to own forever. But keep in mind it does have that lingering lawsuit. It could be a real problem. It could expand to other places. I'm guessing whatever they use for their post-its or some of their other sticky systems are not wonderful for our environment, and maybe it's causing some damage. Again, though, they've got over 2,000 SKUs, I think, in their line of products. And I just don't see, if they get past that lawsuit, I think it's a great company that I wanted to own for a long time and had. So next on my list is Altria Group, ticker symbol MO. We have 11 shares of Altria. Total account value right now is $443.74. Our total profit is a loss of $3.41, and week over week we were over 44 cents. Altria is one that I want to reconsider, so I'm trying to decide what I want to do with it. it pays a really high dividend, and like a lot of you, which is why I said that on JEPQ, I get attracted to high dividends too, but I think it limits its growth rate. I don't know if Altria does that because they sell cigarettes and they worry about the lawsuit that puts them out of business. It does pay almost a 10% dividend. It's 9 and change, which that's a really hefty dividend. And from what comes in on their earnings, they seem like they have plenty of cash flow to pay it. Um, but I just don't know that I see it having real growth potential outside of that. And while it's nice to get a 9.5 or whatever the dividend is, I, I would like to see some things that actually have some growth potential as well. Now, maybe it does, and maybe I'm missing something about it. I'm not overly concerned. It's not one that I just feel like I need to get rid of, but I don't know that it's something I just want to have in my account because it pays a high dividend. I'd almost rather have more PFFA or something like that that I know just pays its monthly dividend than be in Altria. Um, Next one I have is Nextera Energy Partners. NEP is the ticker symbol, and we have 20 shares of Nextera. The total account value right now is $608.20. Our profit so far is $147.80. And week over week, it was down $8.60. Now, Nextera is actually paying an 11.3% dividend right now. And when we bought it, it's paying close to a 15% dividend. That's why I bought it. Now, I talk about this in a lot of videos because it's one of my favorites. Not one of my favorites like Meta and Google and Amazon, but the news on it was that they were going to have to drop the rate at which their dividend increases from, I think they were estimating around 11% to 15%. They had to drop that to somewhere between about 5 to 8% year over year. Now, that's still a dividend increase. The stock had naturally just drifted from like 80 to high 40s or 50. And when the news came out, it really collapsed to like $23 a share. What goes through my head is if the information in the news is accurate. Now, it does make me really nervous when a stock falls that far that there's something else going on. But if the news is accurate, what's the problem? If it's paying a 10, 12, 15% dividend that's going to grow somewhere at 5 to 8% going forward, what a great opportunity. Now, I didn't expect it to be up as much as it is already, but what I was really relying on was getting 12, 14% return at where it was trading. If they can make those payments and raise the dividend. Now, the amazing thing is, I think it's naturally going to start creeping up to $40 a share as well. I think it's going to have a tough time getting through 32 to 35 because on the way down it really slowed down there and looked like that would be a bottom. Forgive my trader personality coming out now, which means as it goes the other direction, a lot of times that area becomes tough to get through because the people who are buying it there are now probably happy to get out and not lose their money. But once it starts to get through there, I think it just starts drifting up back to that 40s level. And to me, that's where the dividend will make more sense because it'll be paying 6 or 7%, growing at a 5 to 8% interest rate, increase each year. At the same time that if the Fed cuts rates and CDs are now only getting 3 or 2% again, 6, 7, 8% return is going to look pretty attractive to people. So I think there's real opportunity with Nextera Energy Partners. Then we have Pfizer, ticker symbol PFE. Now, PFE, if it didn't do when I do the captions, if it didn't spell it right, because I kind of said that weird. So I might be a sucker for Pfizer. I really might be. It's been a dog. It's been going lower and lower, and that's part of what I like about it. It's finally in the news that things are bad, and I like to pick up good companies when the news is beating it up and saying that things are bad. They're paying like a 5.5 or 6% dividend where it's trading. It closed like around 28 and change. I think anything under 30 looks really attractive to me. And what I find is these big, large companies, their stock price becomes a little bit cyclical, where they don't grow super fast year over year, but they have these downturns that last a year or two, and then it reverses and they go up. Maybe I'm wrong. Like maybe I said maybe I'm a sucker on it. But our total account value for Pfizer is $575.80. We're down $3.33 for our profits, and week over week it was up $7.60. What I envision, and again, I'm wrong a lot, so please don't follow me. You guys have to make your own decisions. Is that Pfizer closes the year somewhere between $34 and $38 a share, and you're going to get your 5 or 6% dividend. So if you really think about that, that's great return on a company. It's not exciting. I don't really envision it being at $50 or $60 or doing anything crazy, but man, that's going to be between 10 to 20% equity increase and a 5% dividend. Even though that's boring and doesn't look exciting, that's hitting it out of the ballpark in some ways. So I'd be excited to see Pfizer. I hope I'm right. We'll see if it just becomes like an AT&T that's just a dog for years and years and years, and I'm stuck with it, or see how it goes. So next on the list is the Virtus InfraCap Preferred Stock Fund. Ticker symbol is PFFA. I have 25 shares of it for $517.75. Our total profit is $40.25. It gave us a dividend this week on top of that, which is another $4.13. The week over week change was it was up $6.25. I really like PFFA. Essentially, it gets me into a portion of the market that I don't really do a ton of research myself. It pays close to a 10% dividend, and it pays it monthly, which I love. It doesn't really make a difference. It's just me personally. I'm a bit of a dividend junkie, and I love that they pay it every month. I wish I could put enough money in there that I could get that monthly coming in and pay my bills with it and have that happen every month. It's a really easy way to manage your life and your day-to-day expenses. So I'm not looking to reevaluate it. And if it wasn't clear, I'm not looking to reevaluate Pfizer or NextEra Energy either. Next on my list is a company that I've loved for a long time, which is Qualcomm. Ticker symbol is QCOM. We have 4 shares of Qualcomm. Its total account value is $578.52 for a profit of $60.76. Week over week, we were up $4.92. Now, they make chips for cell phones. They extended their contract with Apple through 2027, I think, and I think they're just going to continue to be profitable. They also pay like a 3% dividend, which I think is a nice additional bonus. It's not really why I buy Qualcomm. It just seems to do okay. It's not something that anybody really talks about the way they do Nvidia or the others right now. Um, Nvidia and ADM might be the best of the best, so it might be a mistake that I just stick with Qualcomm, but I really like them. I figure that cell phones are going to be around a long time, and the chips that they make for them are probably going to be in the phones for a long time. Maybe I'm wrong. Technology changes all the time, so I guess we'll see. So QSR is who I have next on the list. It's a conglomerate of fast food chains. They have Burger King and I think Tim Hortons and maybe some others in there. Well, I know some others, but I'm not sure which ones. Similar to the Foot Locker one, they brought in the CEO who helped grow Domino's immensely over the years. So I'm hoping he has some vision for these ones as well, and that there's a surprise type of growth in it. We have 7 shares in it for a total account value of $546.91. Our total profit so far is $50.96, and week over week, we were up $7.91. I'm not a real lover of the actual food, the fast food chains they have. But it goes along the lines of what I was saying about Foot Lockers. Sometimes people who have success continue to have success. And if he was able to grow Domino's the way he was in the timeline that he was there, I sure hope he can do the same for these companies and we see some huge equity growth and things we just don't expect it for. So maybe I'm wrong. Maybe they just linger around because they're not the best of the best in terms of the fast food chains. Maybe I'm better off in McDonald's or Chipotle or something like that. But I'm betting on this guy and hoping I'm lucky. So next I have Starbucks, SBUX. We have 5 shares of Starbucks. Total account value $480.05. The total profits, which is a loss so far, is $37.70. And week over week, we are up $3.85. I'm really hoping 2024 is a breakout year for Starbucks. They're one of my favorites. I'm not going to reevaluate them. I've owned them for a long time. The last few years, they've really floundered and struggled. I don't know if it's what's going on with China. I don't know if it's their issues about unionization. There have been some murmurs about some stores that they closed might have been to try to not unionize. So I worry that all of that bigger macroeconomical stuff is causing some issues. But it's one of my largest ones to throw in the safe deposit box. They've had really good earnings. They found that they were able to raise prices and it was very sticky, so they've had better margins. They pay a small dividend as well. I'm just hoping that this is their breakout year and that they've been struggling for long enough that they finally start to drift higher. Again, like the others, I don't know that I'm right, which is why you have to do your own research. And I mean that genuinely. As a trader, I learned I'm wrong enough of the times to not really care about it too much and just focus on the overall, how we do overall and not each individual thing. But Starbucks is just one of those companies I love. I think they run a great business, and I hope that this is just their year that they finally break out of that struggling trend. Um, ExxonMobil is next. Ticker symbol is XOM. We have 4 shares of ExxonMobil. Total account value right now is $399.92. Total profit is a loss of $22.40. Week over week, we were down $8.36. I don't know. I marked it as one to reevaluate. I'm worried that with the economy slowdown, which I think the economy slowdown is legit. I still think stocks and real estate are worth buying, so I don't want that confused with the two. Um, but what I worry about specifically with Exxon is that oil prices continue to have a tough time. And when oil prices don't go up, their margins, like if they're getting I'm making the number up, I don't know what their margins are. But if they're getting a 20% margin, and oil prices go up, their profits go up more. Does that make sense? Like their profits will go up too. Because if their oil price is $70, I think that's about where it was at the end of the year, but I didn't pay that close attention. And they're making $1.40 for the 20%, and it goes to 100, and now they're making $2. Well, they're doing better as oil prices go up. Now they pay an okay dividend. I think it's like 4%. They have a great PE, which is nice because it means that the company doesn't in terms of their earnings versus where the stock price is, it's sort of cheap. But that doesn't mean I think it's any bargain here. I just think it's okay priced. And like I said, I worry that it might not be anything that we see huge appreciation in the next year or two, just because I think the economy slowdown is legit and I don't see gas prices going up the whole time. So maybe I'm wrong. I don't know that I'll make a change with ExxonMobil. I'm much more likely with Best Buy, Enphase, and Altria Group. Um, and last on my list, the letter Z, Zillow Group. We have 10 shares of Zillow, $578.60. Our total profit so far is $187.70. And week over week, we were down $9.10. Now, Zillow is one of those companies I'm hoping to get lucky with and just hit a home run. Um, I think over time they could take more and more of the market share of real estate. You know, the let's see, what's the word? I'm getting a bit of a brain fart. So the lawsuit against NAR is a big deal. Now it's going to take a long time for it to play out. This isn't something that happens over the next year or two. I don't really see anything changing for some time. But I do think could have a company like Zillow, which is where almost everybody who's looking to buy a home goes to do their research. Try to come in and really shake up the industry. And if I were running Zillow, or if I had a position there where I could really be in charge of this, I would start hiring young kids and paying them a salary who are licensed as realtors to help with the contracts and be the realtor. I would also have the loans in-house as well as title company and start offering what I would call a Zillow Direct, where I would charge a seller a flat fee of 1% total for both the buyer and the seller. Because if I had the realtors on a salary instead of a commission, I know they wouldn't be nearly as good as the ones that are good out there. So forgive me, those of you who I work with and everything else, because really, there's some real value in what they do. The problem is the consumer doesn't understand it. They think that they do nothing and they just charge a lot of money. They have no idea how much they really save the consumer. The problem is they have no idea. So out of their greed and wants and thinking they're going to do better, all that the consumer really sees is, geez, I can list it here for less. And Zillow, right, might be able to take a real market share of real estate as opposed to one person here, one person there, the way it is now. Now, unfortunately, I think the NAR lawsuit is actually a mistake, and I think the system's not so bad. But I understand why people feel like it is. It's just that I have some insight because it's an industry that I'm in. Now, I hope to get really lucky with Zillow. It's not one like it might not do well, but I hope to wake up in 5 or 10 years and that $500 be 5, 10, 20 grand. Like I really hope that that's just one that gets super lucky. So anyway, those are the 20 stocks. Again, happy new year. I want to thank you guys so much. I can't tell you how excited I am, how well the channel's grown. Never in my wildest dream did I think it'd start taking off the way in my mind it has. So to everybody, a great 2024. If you've made it this far, say something. Be like, hey, I made it to that point where you said say something. Be super cool. And again, don't forget to subscribe. Don't forget to like. Make some comments. I'm really enjoying the conversation, and have a great day.